My name is David Hillier and I am from the University of Strathclyde. I'll be giving a short video today for my students on different types of financial institutions that you may come across in the financial markets. I'm just going to take you through the websites of some representatives of financial institutions, and you can see these at the top of the screen there. And we'll just go through the different parts of each company and the activities that they are involved in. So, to start off, I'm going to first click on RBS. And RBS is a bank. It's the Royal Bank of Scotland. It was one of the largest banks in the world until the financial crisis, and then it had to get bailed out by the government. But it still is involved in in this case, they've categorised it as four main areas. And we'll start off with the first one, which is personal banking. And in personal banking, we also call it retail banking, and it deals with individual banking. And you can see the different things here that you would include in that category. So, for example, current accounts. That's the account that you put your money into when anytime you earn money, anytime that if you get a student grant or you get some salary, it goes into your bank. It will go into a current account. And current accounts don't tend to give you a lot of interest because you are basically just taking money in and out on a regular basis. The next thing that retail banking is involved in is credit cards. And with credit cards, everyone probably knows what a credit card is, but it's like a credit facility, a very easy to use credit facility where you get a card and you can go to shops and spend it as you wish, but you will have a credit limit, and the credit limit will constrain the amount of money that you can actually take out from the bank. But it's like a small short term loan that you can increase or decrease in amount up to a certain level. We then have mortgages. That's lending money for buying houses, and you have loans. These are personal loans, and you can see that they categorise personal loans as between £1,000 and £25,000. And you need to have a current account before you can set up the loan here for the bank. You have savings accounts. So if you've got money that you excess cash that you're wanting to put away, you can put it away through a variety of different vehicles that RBS allow you to have, and they also let you invest in ISAs, which is a British thing which gives you no tax implications on your investments. If you want to get involved in the financial markets and invest in companies or funds, you've got the opportunity here to do it through RBS. If you want to take out insurance, now notice this is a bank, but they also provide insurance services. It's a bank, but they also provide investment services. So it's the banking system in the UK is very broad. It covers many things. And that's a key characteristic of the British banking system, and also the banking system in a number of other countries. But in some countries, the retail banking is specialised. It's split, and you only can focus on like the retail banking. That is the current accounts, the loans, etc. Insurance, it would be have to be a separate company. Travel, if you want to get foreign exchange, the bank can arrange these for you. Now that's personal banking. We go into private banking. Private banking is for high net worth individuals, those individuals who, as you can see here at the bottom, eligibility criteria is you need to be earning over 100k, so the salary goes into the account, and you get minimum like mortgage borrowings of 300k or savings of at least 100k. Now, there is a legal kind of definition of a high net worth individual, and when you are defined as that, you can then get a number of other services where it's still retail banking, but you can get more investment advice. You make more money for the banks, and they make more money from you. So that's why you have the a special section on that. But if you look, you can see that the areas that they're involved in is just the same, but it's just because they earn more money from you because of the size of the transactions, they give you a better service if you're in that category. We now go into business banking, and business banking is for companies that need a bank account. All companies need a bank account, but if you're wanting to go in, set up a company, this is for small companies. As you see, it's turnover up to 2 million, and you get the same service, for the companies as you do for individuals. So let me just look. I'll click on here, banking for larger businesses, here and see what we get. So talk to our experts, look at the services that they are providing, mortgages, accounts. So notice that it's the same type of service, but it's geared towards businesses, whereas when you look at personal banking, it's geared towards individuals. And there are different skill sets and different types of information you need, because with companies, you're trading overseas and you might need foreign exchange, you might need more of that. So that's again, it's like a dedicated team for small businesses. And then you can go to large businesses, which we call corporate banking. And with corporate banking, you get the full range of financing activities, investment banking activities, invoicing, interest rates, anything to do with corporate finance. That's where you focus in this part of the bank. So RBS is a big bank. I've just chosen them as just as an example. You can look at any other big bank, but I think it's a good example because they cover all the different areas. We're now going to go to an investment bank, and an investment bank, the example I've chosen here is Morgan Stanley. It's one of the big banks, big investment banks, and investment banks are advisors, and they're advisors. They advise companies and they advise individuals on where to invest, how to structure a new merger or acquisition, the type of security to issue to the market, which one is the best. They provide brokerage services in that they find buyers for your issues, and I'll just take you through, like, if you look at let's just look at services here on that. So services, financial advisors. It's about advisory services, and this one's for individuals. Investment strategies. If you look at this again, investing on advising on asset allocation. That's where you invest internationally or across asset classes. We can look at institutional services. So these are services that are for companies. It's about advice. You can see financing, lending, brokerage. So think about investment banks as advisors, as sellers of any securities that you wish to issue if you're a company. And think about the retail banking, the big commercial banking like RBS, as dealing with lending, borrowing, and it still involves companies, but it's more to do with the kind of deposits, loans, the type of like banking services which you would see a traditional bank doing. With investment banks, it's about advisory, it's about raising capital, and we had regulation that's changed over time. That regulation in the US split investment banking from commercial banking, and then it was allowed to come together. We're in a state of flux with the regulation at the moment, and how that all comes out and whether we split these up again or whatever, only time will tell. But at the moment, in the UK at least, the banks are can do everything. And in actual fact, Royal Bank of Scotland can also be investment advisors. They can also do this investment banking function, and they have done that very successfully. So again, you've got Morgan Stanley that is a specialist, and then you've got the big RBS, which is like does everything. I'm now going to look at fund management and fund managers. I've got Aberdeen Asset Management here, another British company. Apologies if I'm being too Scottish centric. So you can see here that this company provides a variety of investment advice, a variety of funds, portfolios that you can invest in. I'm going to go through these. Let me just look. So let's just click on private investors. So this is you and I. They've got a number of funds here. Let's just look at the Aberdeen Multi-Asset Fund. And you can see here, it gives you some information on that. Their performance over time, that's 13% over the last year. That's pretty good. Not as mind you, it's not as good as the sector. So 13.9% is pretty good though over the last few years. So, but the sector has actually performed better. Notice that they've got to provide all of this information. Now what they've got is they've got the benchmark. What is the benchmark? So they've said, well, okay, this fund, it consists of, what's it called? It's the multi-asset fund. And they're benchmarking their performance over a portfolio that consists of FTSE all-share companies. They're the largest UK, 40% of those. You get 25% from like the rest of the world, large companies. You've got FTSE British government all stocks, 15% in that. You've got 5% on some loans. You've got 5% in FTSE small cap. So you can see that, like, it's got these. I'm not sure exactly what these are. These must be in fixed income trackers, which again, it would be trackers on fixed income investments. But that's something to look into. So you got that information. Why do you want to invest? Notice that these are funds that are managed by Aberdeen Asset Management here, and they provide that information for you. So I'm going to click on here. I think I've got kind of lost in their website. Yep. Let's look at professional investors site. Let's accept. Maybe I shouldn't. Okay. And this is this gives you again details on particular funds, particular products that they have. Let's look at hedge fund investment. Now I'm probably losing focus in this this video because I'm interested myself. So this is the opportunity for you to invest in hedge funds. I'm not going to talk about that in this lecture, but they are a particular type of investment fund. You can't advertise with them. They have lower levels of regulation. This is something I'll discuss in another video. Okay, so you've got investment funds, you've got investment banks, and you've got the big commercial banks. And then we're going to go into insurance. Now, insurance companies, they take your premiums and they then invest those premiums in the markets. They get a return on those, and they pay out whenever there's a claim made on insurance. Notice that there are a number of different categories. So you've got car insurance here, home insurance. So that's insurance on anything that happens to your car, anything that happens went to your house if it's home insurance, anything that happens to your life, I hope it doesn't, but anything that happens there, anything that happens to your health, again, we're starting to get a bit depressing. And then annuity, about what you should do with once you retire. It's all about insurance. It's all about, I suppose, managing your risk. But the function of these is the same, because what they do is they take money from you, like a bank, like a fund, and they then invest it, and they earn a return on that. Now, with an insurance company, that return that they earn, they then use to pay out any claims, and they would hope that the return that they get from the difference between the premiums that they get in, the investments they make with those premiums, the claims that they have to pay out on, there would be a high enough return for the investors in the actual company itself, in this example, Aviva. Now, I would like you to look through these yourself. Take your time with that. Now, clearly, this is just an overview, so I can't go into it in a lot of detail, but the best way that you can learn about the different types of financial institutions in the markets is by just going to the websites and looking at the services they provide. Now, I've just got a couple. I'm not going to spend that much time on these. I'm just looking at venture capitalists. This is the British Venture Capital Association. It's venture capitalists invest in small companies that need growth. Venture capitalists go in, they grow the company, and then they exit very quickly within about 7 years. I'm not going to spend time in this lecture on that, but it's just important that this is a really good website if you're in the UK. Notice who sponsors this. This is BVCA Summit, RBS, which is a bank. So notice that banks can be involved in this area as well. You can look through this. Venture capital is also private equity. I do cover this in the textbook, Financial Markets and Corporate Strategy, and also I cover it in Corporate Finance as well, and Fundamentals of Corporate Finance. So if you've got any of my books, you'll see this being covered and explained in a lot more detail in here. The very last one that I want to include is a bank. It's similar to RBS, but this one I just want to raise this because I think I really like this. It's a sustainable bank. It's an ethical bank, and its whole mission is to, I suppose, get into the real reason why banks exist. They only invest in environmental issues. It really is quite an interesting bank. It's the same type of bank, but they do it, as it said here, it does it differently. A little video, I'll let you watch that because I don't have time now because I'm running out of time in my video, but it's a growing bank, it's Dutch, and it's and it's a good example of what we would call a sustainable bank. Right, okay, that's me. Thank you very much, and I hope you enjoyed listening.